Good morning. I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Today is non-farm payrolls, and the markets tend to be quiet ahead of that event. You have a small decline in the euro, 22 pip decline in the pound, and you have crude oils down with about 0.4%, and S&P pretty much unchanged at 0.1% decline. Let's take a look at the markets now, but before we start, as always, I need to stress that trading financial markets unfortunately is risky, and there's a genuine risk that we'll lose all of our invested money. So please bear that in mind before you start trading. Let's begin, and we're not gonna begin with this, but this is iron ore. Rather, we're gonna begin with the euro, as we usually do. So the euro is just trading sideways today, and it has a bit of a bearish bias. The market did try to trade a little bit lower here, and has a bit of a bearish bias as well in the pound. Yesterday, you saw how the market declined, and today is continuing to decline, and it might potentially try to take out the July 19th low. So we're starting to see more of a coordinated dollar weakness, and from a pure perspective here, trading the euro dollar, the market is trading sideways between 115 and 117, and we need to break below support here before I would draw any strong conclusions. Until that happens, price could easily just bounce to the upside. Especially if the non-farm payrolls fail to meet expectations. So the market projects that non-farm payrolls increased with 190,000, and that average hourly earnings increased by 2.7% year on year, and that the unemployment rate ticked down to 3.9. The key indicator to watch, as it has been over the last 2 years or so, is average hourly earnings. It's been capped really by pretty much, I think, about 3% or so. 2.9 to be exact. And obviously, if we trade above that level, then we're probably going to hit higher. And in the past, we have seen higher average hourly earnings numbers. But pretty much since 2017, this indicator is capped by 2.9. So a break to above 2.9 would really get people excited, and could potentially cause this market to head much higher. But what can we say about this? Well, keep an eye on it. If it's better than 2.7, that should really cause the market to trade higher. And this is the number as well that people watch. But as long as the number is higher than 150,000, then the unemployment rate will remain pretty much unchanged at 3.9, maybe 4%. And as long as the unemployment rate is about 3.9, 4%, then it's likely that average hourly earnings is going to increase in the months ahead. And it's more likely as well that the Fed is going to continue to raise interest rates this year. Next market we're going to cover is going to be the price of Bitcoin, which is lower today, and the market is lower and is now challenging its trend-defining level at 7,202, with a break to this level potentially causing the market to resume its bearish bias, maybe trade down to 6,400 and maybe 6,050. So it doesn't look too good for this market right now, and the Bitcoin is obviously not being helped by the fact that a lot of the other altcoins are not rallying with this move. We have not seen a strong move. In fact, Ethereum here traded below its June low and might really just stabilize here, but at the end of the day, it did not rally in line with Bitcoin. You have Ripple, which is on the verge of trading below its June low, and if we trade below the June low, then the November 2017 high of 28 cents is the next level, so that will be almost more than, I think, 50% decline. Will be 34% decline. So altcoins are not joining in, and I think that's weighing on Bitcoin. So what can we do here if you're long from these levels here? There's not too much to do about it, to be honest. It's wait, and if we trade below the trend defining level, we'll get stopped out, and that's it. That's the end of that, and we move on with the next market. Here's gold, and gold is doing good. You might remember a few days ago, actually not a few days ago, quite a long time ago here from July 20th, I said that if the market would swing up to these levels, I suspect traders are going to try to sell. They did sell up here and then moved up, almost got stopped out, but then moved lower and then up again and then down and then potentially lower here. And the trend defining level now has been reduced to this level. We touched the target we discussed because we said sell here for this to come down. It touched that level today, and it wouldn't be that clever to hold on to gold short positions if you are a short-term trader, as most people are. So we prefer to book profits here, and I think if we would spike up to 12.15 ish, then I think traders are going to sell again, and I think stop loss orders are going to not be up here but rather down here at the 12.29. And here's crude oil. Crude oil is trading sideways, really. There's not too much to say about this. The market did try to trade to the downside, quickly bounced, which is good actually. You know, the longer trade sideways, the easier it's going to become to trade on a breakout, and potentially a break to 66.92 can take you down to 65.50. And here's the German DAX. You might remember in the beginning of the week it was trading up here, and I said if it swings lower, then pretty much from 12,679 all the way down to 12,462, I suspect traders would look to get involved. You can see here how the market yesterday just declined and declined. There was not a single bullish candle until the market bottomed out here at 12,504. And the market has now stabilized and potentially could head to the upside. And that's pretty much it. Good morning, Antonio. Thank you so much for joining. All right, so we're going to keep it short and sweet today. I want to thank you so much for joining. And I'm not going to do a non-farm payrolls coverage today, but we're going to be back with a non-farm payrolls coverage most likely next month. If you liked the video, don't forget to hit that like button. Have a great evening, guys, and also a great day and a great weekend, and I'll see you guys on Monday. Thank you.